All right, everyone. Thank you for joining us today on the TradeXchange Week Ahead webinar. Just a quick recap of last week, and then we'll go up to the week ahead. So we had another week of strength to start the year. The Dow up about 3.5%, S&P up over 4%, and the NASDAQ up close to 6%. The CPI report came in line at 6.5% year over year. Core inflation, which is closely watched by the Fed, rose 0.3% month over month. It was just interesting to see markets take this as a basic non-event, since many traders and economists were expecting for a much colder reading. This week as well, we had expectations of commentary from Fed Chair Powell and was basically a non-event. Earnings, though, started this Friday with the banks coming in with mixed results, and the majority of the banks came out with cautious views of the economy. One interesting aspect as well is the VIX, commonly referred to as the quote-unquote fear index, which continues to drop down about 13% this week, breaking the recent readings of the 20s support level. We'll go over that as well when we look at some charts. Energy showed strength, as well as lumber this week. One of the names that got crushed last year. So it's interesting to see lumber see an uptick. Oil up about 8%, gasoline up about 12%, and lumber up over 20% this week. Traders mentioned recent eases over in China for this quick run-up in energy prices. One thing that we're surprised to even be talking about is Bitcoin. Bitcoin had a quick run-up as well, right back to that 20,000 level resistance, which makes us wonder if this move is a clear market-wide dead cat bounce, or are we seeing the names that got hit from last year starting to see the uptick this year? Case in point, Bitcoin, lumber, some of the small cap names in the Russell, and the names that got hit in the NASDAQ. So it's interesting to see if this continues, or are we seeing a small dead cat bounce? What do we always say? We say watch the US dollar for an indication on markets. And what have we seen the past 2 weeks? Weakness across the board on the dollar, and 2 weeks of strength in the US markets. This week, members, keep in mind US markets are closed on Monday for Martin Luther King Jr. Day. Rest of the week is filled with Fed speakers, some key economic reports with retail sales, beige book, your PPI final, and existing home sales. And then interesting as always, to end the week, we have the Davos Symposium, which is always brings us a clear view of some top financial leaders and their views on markets and the economy. So let's take a look at what we're looking at for next week. Upcoming US and world events. We do have earnings coming up this week, as always, building up into a much more busier week next week. This week we have Alcoa, AA, Goldman Sachs, GS, Morgan Stanley, MS, Netflix, NFLX, Procter & Gamble, PG, and United Airlines, UAL. Upcoming U.S. and world events on Monday, as we mentioned, members, U.S. markets are closed, but we do have the China GDP, retail sales, and industrial production. On Tuesday, on the U.S. side, we have Fed Speak Williams. On the European side, the Germany CPI and the ZEW survey, and in Japan, machinery orders and the BOJ announcement. On Wednesday, on the U.S. side, PPI final, retail sales, industrial production, and the beige book. We also have Fed Speak, Bostich, Logan, Harker, and Bullard. Overseas in Europe, we have the UK CPI. On Thursday on the US side, we'll be watching housing starts, the Philly Fed Manufacturing Index, and Fed Speak Williams and Collins. Overseas in Europe, we have the ECB minutes. And members, we do have the start of the World Economic Forum at Davos. On Friday, US side, existing home sales, Fed Speak, Harker, and Waller. And as we mentioned before, the World Economic Forum. As always, members, take a peek first thing in the morning to see any updated commentary in regards to any additional Fed speakers that are scheduled to speak. Company events for the week, as always, you have your top shareholder meetings and analyst calls. As always, members, you can shoot us a question in regards to any of these in regards to the Ask the Desk. We also have your top conferences for the week, as always. If anyone has any questions in regards to who is speaking or anybody attending, you can reach out to us via email or ask the desk. We added a little weekend commentary for all our members. The economic calendar for the week. Monday, as we know, U.S. markets are closed, and we have a lot of the Fed speakers coming. So we do have a pretty busy week on that side, as well as on the economic side that we went over previous. Your international top economic calendar for the week, as always, we do provide these in regards to anything on the international side. Earnings. So we do have the start of some big names coming next week. In the following weeks, we'll be seeing a much larger list on the earnings side. This week on Tuesday, we do have Goldman and Morgan Stanley. After hours on Tuesday, we have United Airlines. On Wednesday, after hours, we have Alcoa. Pre-market, we do have Schwab. On Thursday, after hours, we'll be watching that Netflix, NFLX. We'll be seeing how those numbers, as they will affect other streaming stocks, NFLX. And on Fridays, we have not too much. We just have SLB Schlumberger in the morning on Friday. Your fear and greed index, the greed is back, members. We had 2 strong weeks in the markets to start the year. So we are seeing that greed index jumping from last week was a 47 to a 60. Last week was a 57 to a 63. So we are seeing that greed index continuing to uptick. Your weekly sector performance, not much on the weak side. We did have weakness in consumer staples and healthcare, but strength across the board in every other area. Consumer discretionary, we saw strength in materials, real estate, technology, energy, all across the board saw strength continuing this week in markets. Your NEC comparisons, we are still seeing a turn to the upside in markets across the board in all 3 indices. So we're watching that very closely. Your sticky price consumer price index, we did see a little uptick. Not many people have been discussing this at all, but we did see a little uptick in this on your sticky price consumer price index from the previous move. You can see it tried to level out here. If anyone has any, we can always send a clearer picture on this, but we did try to level, but we did see a little uptick on the recent report. As always, members, your target rate probabilities for Friday for February are currently at a 25 basis point hike, 93.7%. So it's a clear mindset that the Fed will be raising 25 basis points at next meeting. Your year-to-date percent returns, as we mentioned before, that lumber saw a huge move. Last week, lumber closed down 5.27%. This week, it's up over 16%. So we saw a strong move in lumber, as well as in copper, in all 3 of the indices. But interesting moves in lumber, copper, gold, gasoline, a huge move in gasoline as well. So we are seeing some of these plays that got hit at the end of last year starting to see an uptick to start 2023. Your AAII Investor Sentiment Survey, we are seeing continued week over week of the bearish mindset dropping. In December, near the end of December, we were at 52.3% on the bearish mindset. So that continues to drop as the market is starting to see a small rally. And as we all know, as goes January, so goes the year. We'll see what happens the final 2 weeks of January. Sector outlook, as we mentioned before, on the top, we have consumer discretionary, communication services. It's interesting, members. One thing that we mentioned in the beginning of the conversation is a lot of the names that got crushed last year are seeing the moves this year. Last year, the 2 final places in regards to sector outlook percentages, consumer discretionary and communication services. So that's where we come to the point of, is this a move from the weak names last year to the strength this year, or are we seeing some sort of a bounce, a dead cat bounce in these markets? I think we'll get a better indication as January rolls on into February, but it's something that we've seen, by preparing these reports, something that's an interesting aspect in regards to the activity that we've been seeing in these markets. IPO lockup expirations, none for the week. Expected IPOs, we have 2 expected. On the FDA calendar side, not much scheduled. As always, members, check the news desk if that or our morning mashups for any updated commentary in regards to that. Now we're going to jump into some charts, starting off with gold. What can we say about gold? We're going to try to make this a little bit bigger so we can get a clear look on these charts. But what can we say about gold? Look at this chart. It's a pure technical move right off the uptrend. We mentioned last week how beautiful this chart was looking to the upside. It traced the uptrend perfectly, and this week we broke above 2 levels of resistance and ended at a new resistance level between the 1925s and 1950s. This is a key level that we're watching on this gold, and we'll be keeping a closer eye in regards to this move this week. SPY daily, no changes to this chart's members. We had a level built at that 380s that we've been discussing for weeks and mentioned to watch the 390s level resistance. Once that level resistance was broken, we see strength coming into the SPYs, ending the week at 398.50. We are watching this 400 level as a key level on tap for this SPY. So we are watching this very closely for any move above this level, or we're going to see a test and a retrace back to 390s support. NASDAQ, no changes to the chart. Last week we said a break above 10,005 is key for a directional move. And what did we see? A break above 10,500s, and we ended the week at 11,079. We are still in this long-term range of the 10.5s and the 11.5s. So we are watching this very closely. Will we see a range break soon? We think that will be very key if that is seen to happen. SPY dailies on a moving average look. We are starting to see everything starting to turn, but we are heading into some key resistance levels. So we keep an eye on this very closely. QQQ daily, same thing. IWMs all starting to turn, but we are starting to trend right to some key resistant level points. So we'll be watching that very closely these next few weeks. Your 10-year yield weekly, no changes to the chart. Well, we are back to those support levels. The range we mentioned in December of 3.4 to 3.6%. We ended at 3.511%, so we are back to square one, and we wait for a break of those levels once again. Will these levels break the 3.4% to the downside, or will we see another move back above to the 3.8 level resistance? Diamonds on a daily with your moving averages. IWM daily, a little explanation. No changes to this chart's members. Just look at this chart, no changes at all done here. This is the same chart as last week, just the added data. If you follow a chart like this, it just gives you conviction of a move. We built a base, we broke a downtrend, another break of resistance, another break of resistance, and a key ending at 187, a key resistance point. So this is a clear indication of how we believe this market has been very technical, and believe that it will continue to be technical even with these earnings reports coming. HYG daily on a moving average basis. S&P 500 daily, no changes to the chart. If we can go back each week and read the notes, we can see how important technical analysis can be, as we mentioned. Last week, that breakup of the 3900s, we mentioned last week that a breakup of 3900 could see a test of the 4000s level. And what did we see? We broke above 3,900 and we tested the 4,000 level resistance. So we'll be watching that very closely in the upcoming weeks with earnings season. VIX, we saw the break on the VIX. One thing that we are watching, is it going to be similar to this? Or are we going to see similar to this where we trend back to the 14, 15 levels on the VIX? Watching it closely, watching this week as an indication on the VIX, and a directional move in the fear markets. Oil, no changes to the chart. Crude oil ended the week at a key level resistance at the 80s and 82s, a level we tested in November and December that was not broken. If we break this test again, we could revisit the key 85 to 90 level range resistance. US dollar daily, we added a new level of support going back into June and April. We mentioned for the weeks that the key level 104s is clear, and for a watch if any of that breaks. This week we saw a downside break, and we saw a week of weakness to end at 102.18. We added that short-term support level, which is trading right into that range. Will we bounce here, or will we see that weakness continuing and then we got nothing till about below 100? So we are watching this one very closely, as we believe, and we've been saying, recent action in markets dictating that the US dollar is giving moves in markets. But also, members, keep in mind, the weaker the US dollar gets, the worse it is for inflation. As we all know, the Fed wants a stronger US dollar because it helps benefit the inflation reading. So we'll see how this happens, or how this will affect any inflation reports coming up with the recent weakness in the US dollar. Bitcoin, what can we say? No changes to the chart. It traded right through technical levels. Even Bitcoin, in our opinion, could be technical. Broke above this level, sharp move to the next level of resistance. Broke above that level, sharp move to the next level of resistance. Is crypto technical? Possibly. Where, we don't focus on crypto much, but it's just interesting to see how, with no changes to the chart, this is the same chart for weeks and weeks and weeks, how it basically trended right through those technical levels. SMH daily, moving average. And that does it for our technical look on charts. As always, members, we do open up for any questions or comments in regards to our what we're looking at in our week ahead report. Members, keep in mind, as always, U.S. markets are closed tomorrow for Martin Luther King Jr. Day. We're going to go mic silent real quick. We have a few questions in our email, and then if anyone has any questions, in the chat box. One question we always get each week is our views on the markets. Members, as we've been saying, we believe this market is a very technical market. What we want to see right now is if we're seeing strength coming back into play, or are we seeing a bounce off of the weakness? And what we mentioned earlier and throughout this webinar is the fact that the bounces are coming on names that got crushed at the end of last year. Even commodity plays. Crude oil got destroyed at the end of last year. Gasoline, lumber got destroyed all year long. Those are the names that we're seeing strength. We're seeing strength in Russell 2000 names, the IWMs. Strength in these NASDAQ names that got crushed at the end of last year. So we're seeing a lot of moves in these names that have gotten weak. And we're starting to wonder if we're seeing market people seeing value, or are we seeing a dead catter on this move to the upside? I think we'll get a better indication in the next few weeks going into February. But as we mentioned this week, we got Fed speakers. We're going to be focused on this Davos meeting on the economic commentary. So it's interesting to see what some top financial people in regards to, and economists believe and see, and what is going on in the economy. We have Fed speakers throughout the week. Some interesting economic data they'll be watching: the retail sales, see how the consumer is doing. The PPI final, which is not as important as the CPI, but it is an inflationary print on Wednesday. Industrial production. We do have some housing data coming out with the housing market index on Wednesday, and the existing home sales on Friday. Housing starts as well on Thursday. So we have a pretty busy week on the economic side, even with this shortened week. So we do have a lot on the agenda. It'll be interesting to see how these names, correlating with the rest of the bank names reporting with Goldman and Morgan Stanley, affect any market activity going into the week. Our thought process in regards to markets, as always, with the volume coming back into markets, it's interesting to see any activity on the technical aspect. We are trending right at a lot of resistance levels across the board. So we're wanting to see if we break through those resistance with volume, or are we seeing a test and a small paring back following the recent strength that we've been seeing. That is our thought process. That's what we're watching. As always, members, you can always shoot us an email, shoot us a message on the Ask the Desk. We always try to respond back as fast as we possibly can. And we want everyone to enjoy the rest of the holiday weekend. Don't forget, markets are closed on Monday, but as always, the news desk will be running full steam. Anything happening will be posted in the news desk. Thank you, everyone. Enjoy the holiday break. We'll see you all back on Tuesday on the Squawk. And if any questions, as always, members, reach out to us. Thank you. Enjoy. Trade Exchange out.